Start.
Yeah, hello everyone. We got here Wang presenting his final dissertation thesis. So over to you, Wang.
Hi everyone, I'm Wang from the School of Computer Science at the University of Sydney, and today I will be presenting my capstone project. Why do we do this project? Most trading strategies focus on using AI tech to predict whether the market will go up or down. The problem is that financial markets are noisy and difficult to predict consistently. We cannot use very deep or large model to feed that noise data, like what we do in language model. So we try a different way. There are three main goals in the project. First, we must find the most predictable and robust rule-based trading strategy. Second, we will measure the performance of the best strategy across different financial markets. Finally, I will use different AI tech as a signal feature to see whether the results will be better. Uh, then I test many different approaches. This includes trend following strategies and range market strategies. Each strategy has strengths and weakness. Trend following ones work well in strong trends, but struggled when market conditions changed. Range strategies perform better in sideways market, but often fail during strong breakouts. Fair value gap do not depend on cycles, but the returns are top level unstable. It's difficult to achieve high annual growth with this strategy, but ORB can do it. The rule of it is simple and robust, but can consistently perform well across multiple markets. Then I test the strategy across cryptocurrencies, commodities, US stock, indices, and forex. The first one is crypto market. Let's start with cryptocurrencies, BTC and ETH and Solana. Mm, it generates more than $32,000 in net profit with a relatively controlled drawdown. The main reason is that Bitcoin has stronger liquidity and more consistent trending continuation after breakouts. ETH performs less consistently, and the Solana generate weak results with false breakouts. So the key takeaway here is that ORB works best in highly liquid markets where momentum tends to continue after a breakout. Then we come to the commodity market. Gold was one of the most interesting symbols in the commodity market. The original ORB strategy was already profitable, but the drawdown is very large. To improve the strategy, I use the fair value gap to optimize the buy point of ORB. Instead of entering immediately after breakout, the strategy waits for retracement into a fair value gap area before entering. The result was very encouraging. Net profit more than doubled, while drawdown was significantly reduced as a percentage of account growth. This shows that better entry timing can greatly improve the trade strategy performance. Then we come to oil and silver. Both markets produce positive results, although not as strong as gold. Then we come to the US stock market. Here is the Apple. The original ORB strategy was profitable, but it was generated many lower quality trades. To improve performance, I added an EMA trend feature. The idea is simple. Only take long trades when the higher time frame trend is bullish, and only take short trades when the higher time frame trend is bearish. After applying the feature, drawdown decreased significantly and overall performance became much more stable. This suggests that trend confirmation is particularly useful in stock markets. Uh, then we come to Tesla. We also add the trend feeder in Tesla and it showed a similar pattern. The trend feeder improved win ratio and reduced drawdown. Finally, we come to MSFT. Microsoft was another successful case. The ORB strategy generated stable profits and relatively balanced risk metrics. One interesting observation is that ORB appears to work particularly well in large cap US stocks. These stocks often experience strong directional movements during the market opening period, which aligns well with the logic behind ORB. Finally, we come to SPY 100 and your US dollars. The slide highlights an important finding: US 500 produced positive results and remained profitable throughout the testing period. However, EURUSD performed poorly. This may be because US 500 has a clear opening session and often exhibits momentum after the markets open. Forex markets operate almost continuously and show more mean reverting behavior. As a result, ORB is much less effective in Forex markets. We find the top three symbols. There are XAU US dollar, BTCUSD, and AAPL. Together with the value gap feature produce the highest net profit. Bitcoin delivers stronger standalone performance without requiring additional features, and Apple benefited significantly from trend confirmation. These three examples demonstrate the central conclusion of the project, and the different markets require different optimization methods. Finally, we try to use some AI tech as a signal feature. Before training the model, I first need to handle the training data carefully. Financial training data is different from ordinary machine learning datasets because the time order really matters. So there are three important data processing rules. First, when matching trading records with market feature, I use backward matching. This means each trade was only matched with information that was already available at that time. Second, I avoid normalization based on the whole dataset because that would introduce future information into the training process. Third, I avoid oversampling methods like SMART. They will make fake data, which is not allowed in this area. So the goal was to keep the dataset realistic and avoid feature data leakage or artificial market patterns. After preparation, I test the MLP model as the first approach. The model trained quickly, but the result in test set was useless. As shown in the confusion metric, it tended to do nothing and failed to identify meaningful trading opportunities. So at this stage, MLP didn't provide a reliable signal feature. The result also suggests that a neural network is not the best choice for this project, mainly because the number of trading samples was limited and the model required more data to learn stable patterns. Uh, then we then we no longer pursue very deep models, switch to more simple one like light GBM, but the initial results was also weak. However, we apply a feature engineering and the performance improved substantially. I introduced features such as ORB to ATR ratios and the relative position of price with the ORB range. These features help the model better distinguish between high quality and low quality trading opportunities. As a result, Light GBM became the final machine learning model used in the project. Uh, we evaluate the performance of the feature in the test set. Before applying Light GBM, the ORB strategy generated 312 trades. After adding the feature, the number of trades dropped to 136. Although we take fewer trades, but the quality of those trades improved dramatically that we want. Net profit increased from about $22,000 to nearly $37,000, and the win ratio increased to 75%. This supports that the idea that large GBM combined with feature engineering can be effective when used as a trade filter rather than a price prediction tool. Although the results are promising, there are still limitations. Most of the findings are based on historical backtesting. Future work should include live trading, validation, and larger data. I would also like to incorporate additional data sources such as order book information, trading volume, and the alternative data to build a stronger model since more data is never worse. Finally, with more data we can try more strategies including multi-factor, arbitrage, and market making. That's all. Thank you for listening. I'm happy to answer questions.
Thank you, Wang.
Yeah.
I stopped the recording.